Hi, my name is Craig Covey and I'm an independent insurance agent. Today, I'm sharing another reason for you to be working with an insurance agent rather than getting your insurance from an 800 number or a website. You were recently in an accident and the other party was at fault. You're getting your car fixed, but what the insurance company will not tell you is that your car's market value will be less when you get it back. The difference between your car's market value before the accident and after the accident is called diminished value. And I'm going to explain how you can get reimbursed for this difference. First, let me start with how the claims process works with me. When I'm working with my clients regarding these types of claims, I walk them through a process to help make sure that the claim runs smoothly and quickly, starting with writing down or typing out a statement about what happened. I instruct my clients to do this for several reasons. One, when my client is given a recorded statement to the claim adjuster, having a written statement helps them to stay on the details and not ramble on. This is a nerve-wracking situation when giving a recorded statement, and it is easy to go on about the weather or to over-detail what happened. What I mean by this is that because someone is nervous and because the claim adjuster is not asking a question, and then there's a long pause because the claim adjuster may be making a note, so the claimant wants to fill in that silent space, and therefore they start filling it in with non-essential details. Number two, it also allows my client to capture what happened while it's still fresh in their mind. Number three, having it written down allows my client to provide the details in a more precise manner about what happened. They can read from what they've written down instead of trying to discuss on the fly, which could lead to providing information that's not accurate or could be misunderstood, which could lead to an adverse result or even delay in a determination. Regardless if you have injuries or not, there is still diminished value. However, I always like to wait until the end of the claim to bring up diminished value. The reason is because if you do have injuries, I don't want any settlement of the injuries to be included with the diminished value. I'm only suggesting this in a manner that could help you get the most value out of the settlement for your injuries and for the lost market value. If you have injuries, then you might have an attorney, depending on the extent of your injuries, and they may go about it differently, which is fine. If you do not have injuries or not legally represented, then I find it best to wait until the end to bring up the diminished value so that it is not affected by any offer of settlement or the injuries. So how is diminished value calculated? Most insurance companies these days are using a calculation called the 17C Diminished Value Formula to determine the new value of a vehicle post-accident. This formula first appeared in Georgia claims case involving State Farm, where it appeared as paragraph 17, section C. Here are the steps used to calculate the diminished value using this formula. Each step I'm about to explain tags on to the preceding step, so here are the details. Step 1, determine the value of your car. You can do this using NADA or Kelley-Blue Book. Both offer calculations for the value of your vehicle based on the year, make, model, mileage, and condition. Step 2, apply a 10% cap to that value from step 1. This cap is the maximum amount the insurance company will pay on the claim. Step 3, apply a damage multiplier. This is used to adjust the value from step 2. The 10% cap value is multiplied by a number ranging from 0 to 1 based on the structural damage done to the vehicle post-accident. A 1 would be severe structural damage. A 0.75, major damage to the structure and panels. 0.5, moderate damage to structure and panels. 0.25, minor damage to structure and panels. And a 0, no structural damage. Step 4, apply a mileage multiplier. While NADA and Kelley-Blue Book take the mileage of the vehicle into consideration when determining the value, the insurance companies calculate their own mileage deduction. The adjusted value in step 3 is now multiplied by one of these mileage multipliers below to calculate the final diminished value of the vehicle. A 1 would be 0 to just under 20,000 miles. A 0.8 would be 20,000 miles to just under 30,000 miles. A 0.6, 40,000 miles to just under 60,000 miles. A 0.4, 60,000 miles to just under 80,000 miles. A 0.2, 80,000 miles to just under 100,000 miles. And a 0 to 100,000 miles plus. So if your vehicle's Kelley-Blue Book value is $20,000 after the repairs, then the most you'll get is $2,000. That's that cap value. This is the most that would be paid out in this example. This $2,000 is then calculated in step 3 based on damage, and then step 4 based on the mileage to determine the final amount. I started this message with the scenario that the other party was at fault. If you were at fault, then you will most likely be denied trying to get diminished value. As you work through your claim, I expect that you are doing so with the other party's carrier. If you had to file through your insurance, this can make it a little more difficult to get the diminished value, but not impossible. Be sure and document your vehicle's value from an approved source like Kelley-Blue Book. Texas laws here are easy to work with, but you should always be prepared, so capture as many documents about your repair as possible to represent your diminished value claim. I hope you found this information useful, and if so, please hit that like button and subscribe as I introduce more content like this. Also, please consider sharing this video with others, as not a lot of people know about diminished value and even less people know about this calculation. Having an insurance agent can go a long way in situations like this, but you need to have a good agent. I have a short video series that I put together about how to shop for insurance and what to look for when getting quotes, how to talk to agents to see if they're a good fit for you, and how some of them market to consumers. Please leave any comments and feel free to let me know if there's any subject about insurance that you would like to learn more about, and I will put it in a future video. Also, please let me know if you have any questions or if I can be of any help to you.